Are there any exemptions or deductions available for taxes on cashed savings bonds?
Hey there, welcome to today's video. Today, we'll be discussing an important topic related to taxes, exemptions and deductions for cashed savings bonds. If you're wondering whether there are any tax benefits when it comes to cashing in your savings bonds, you've come to the right place. So, let's dive right in.
What are savings bonds?
Before we delve into the exemptions and deductions, let's quickly cover what savings bonds are. Savings bonds are government-issued securities designed to help individuals save money. They are often considered low-risk investments and are backed by the full faith and credit of the government. When you purchase a savings bond, you are essentially lending money to the government.
Taxation of cashed savings bonds.
Now, let's move on to the taxation aspect. When you cash in a savings bond, there are two types of taxes to consider: federal income tax and state income tax. The interest earned on savings bonds is subject to federal income tax but is exempt from state and local income taxes. This can be advantageous for individuals residing in states with high income tax rates.
Exemptions for educational expenses.
One of the key exemptions available for cashed savings bonds is for qualified educational expenses. If you use the proceeds from your savings bonds to pay for qualified higher education expenses, you may be eligible for a tax exemption on the interest earned. However, there are certain conditions that must be met to qualify for this exemption. To be eligible, the bonds must be issued after 1989 and must be in the name of either the taxpayer and their spouse, or a dependent. Additionally, the taxpayer must meet certain income limitations to take advantage of this exemption. It's important to note that the exemption only applies to the interest portion of the savings bond, not the principal.
Using proceeds for qualified first-time homebuyer expenses.
Another exemption available for cashed savings bonds is for qualified first-time homebuyer expenses. If you use the proceeds from your savings bonds to purchase or build your first home, you may be able to exclude the interest earned from your taxable income. However, similar to the education exemption, there are specific criteria that must be met to qualify. To be eligible, the savings bonds must be issued after 1989 and must be in the name of either the taxpayer and their spouse, or a dependent. The taxpayer must also meet certain income limitations, and the funds must be used within a specific time frame for qualified expenses related to the purchase or construction of the first home.
Deductions for education savings bonds.
Apart from the exemptions we just discussed, there are also deductions available for education savings bonds. These deductions allow eligible taxpayers to exclude from their taxable income the interest earned on specific types of savings bonds used for qualified higher education expenses. The Education Savings Bond Program allows taxpayers to deduct the interest earned on eligible bonds issued after 1989 if they were used to pay for qualified higher education expenses. It's worth mentioning that this deduction is subject to certain income limitations, and there are additional requirements to be met. And that brings us to the end of our discussion on exemptions and deductions for taxes on cashed savings bonds. Remember, when it comes to taxes, it's always a good idea to consult with a tax professional or refer to the official IRS guidelines to ensure you are fully informed about the specific rules and regulations that apply to your situation. I hope you found this video helpful and informative. If you have any further questions, please feel free to leave them.